Card programs that take 18 to 24 months to launch, deals that die on the vine, and banks that can't actually see what their fintech partners are doing. Today on Anvil and Iron, we're talking to two guys who looked at that mess and said, we can do this better. Welcome to the Anvil and Iron podcast. We're on a mission to talk to the most innovative minds shaping the future of business and finance. Every episode, we sit down with leaders who are forging new paths, the kind of people you want in your network and you need to know. So we keep it simple, genuine. We're looking for real insights and zero corporate fluff. Today, I got two guests on the mic, Steve Nigri and Walt Hoffmann, co-founders of NXTMOVES. Did I say that right, guys?
Yeah.
Yes.
NXTMOVES.
Okay. I know I've asked you before. Sorry about that. But hey, they're a financial services company building a multi-bank, flexible card issuing program management platform. I know that's a mouthful. It's for retailers, fintechs, and modern business. They're helping banks and businesses grow together through issuing, acquiring, lending, and full program management built for speed, safety, and less risk. Steve, Walt, welcome to the Anvil and Iron.
Thanks, Joe. Appreciate it.
Good to be here, Joe. Thanks for having us.
Outstanding. Stop. Okay. So I think, Steve, it's on you. You have something that, Walt, are you hearing it at all? It's rustling around. Like every time you move, it sounds like somebody's rubbing sandpaper up against the microphone.
Okay. Hold on 1 second.
Can you,
I'm going to get headphones.
are you wearing a mic?
No.
Walt, can you help me figure out what maybe, because even when he walks away, it's...
Yeah, you're picking up
I can hear his legs squeaking together.
It's on your phone. It's running on.
Oh.
Are you guys in the same room?
No, we're just in the next door. Yeah, he's just next door. So it was his phone. Like he was using his phone audio as well.
Oh, and was it in his pocket?
Mm-hmm.
Yeah,
oh my gosh! Yeah. Okay. All right.
We're gonna. Side has that thing where
credit and debit card programs that take 18 to 24 months to launch, deals that die on the vine, and banks that can't even see what their fintech partners are doing. Today on Anvil and Iron, we're talking to two guys who look at that mess and said, we can do better. Welcome to the Anvil and Iron podcast. I'm Joe Knotts. We are on a mission to talk to the most innovative minds shaping the future of business and finance. Each episode, we sit down with leaders who are forging new paths, the kind of people you want to know and the people that you want in your network. So we keep it simple, genuine, and no corporate fluff. Today, I've got two guests on the mic, Stephen Nigri and Walt Hoffmann, co-founders of NXTMOVES, a financial services company building a multi-bank, flexible card issuing and program management platform. Steve, Walt, welcome to the Anvil and Iron.
Thanks, Joe. Appreciate it.
Good to see you.
Hey, listen, let's start with the origin stories. There's only one Steve and only Walt, and the two of you have been around fintech and payment block a couple of times. Tell us a little bit about yourselves.
Yeah, I'll jump in. So, hey, everyone, thanks. Walt Hoffmann. So, I've been in the fintech space and banking space for 20 years. Started off at a big corporate entity called Jack Henry and Associates, which served a great purpose, if you will, early on in my career to kind of educate me about everything that was in banking, everything that was in financial technology. But I kind of stayed more down the path of the product kind of arena, if you will. And so more recently, I was a chief product officer at a company called Nextsoft that built middleware and integration between 40 different core banking systems and 300 different platform peripherals like loan origination, online banking, document management, things of that nature, and was actually got to have a chance to work with Steve directly, even though we're friends for 20 years, at a company called Move Financial. Move is a platform primitive, so think of it like if someone was to rebuild Fiserv or FIS in their payments division all over from scratch, you kind of have that type of infrastructure. And we started NXTMOVES 2.5 years ago to kind of solve a couple of problems we saw in the industry, and wanted to do this together. So appreciate your time.
Absolutely. So you went from Move to NXTMOVES. Okay, you guys are creative. All right. Steve, when you talk about rebuilding trust between banks and fintechs, what specifically was broken in the old banking as a service model?
Yeah, well, I same here as I was 20 years in and been through, worked with over 600 banks and been through, worked with a number of different payment companies. And one of the things that we felt was broken when we really went through and interviewed numerous amounts of banks was that it was the one-to-one underwriting. So what happened in a lot of what people will call like BAS 1.0 was that there was no visibility to the bank to see down different layers of exposure to who was actually using the credit and debit cards. And so that was really where it became really difficult for banks to get involved and do more card programs. It became difficult for them to, want to do programs and want to put better debit and credit cards out into the marketplace because they just didn't have the visibility into who was actually using the cards and how they were using the cards and were they using the cards for good and not for criminal activity and along those lines.
Okay, so let's just talk big picture for a moment. You're not just another processor. You're building a multi-bank, multi-tenant issuing and program management platform. It lets retailers and fintechs run serious card programs while giving banks visibility. Let's talk about what that looks like. So for our listeners, and mainly me, can you tell me, like I was a fifth grader, what it means when you say you're a flexible card issuing and program management platform for retailers and fintechs? That sounds like a mouthful.
Yeah, so I'll take a stab at that. So we'll take it from the standpoint of from retailers, right? So let's just say you're an online merchant retailer.
Hey, stop for a second. Stop. Hey, Walt, what internet are you on? Because you're fuzzy.
So are you, by the way.
I'm fuzzy too.
Mm-hmm. You guys are fuzzy.
We have the backgrounds on, is what it is.
I think that is the background fuzzy. Since you don't have anything distracting in your background, I'd say take background fuzziness off.
Yeah. I don't know
where settings.
Okay. No, but Walt, I'm seeing his. Are you hearing him phase in and out, or is that just me?
That's you.
That might just be you. He sounded pretty clear.
I think unfortunately you have to stop recording so I can change the background effect.
There we go. So big picture, you're not just another processor. You're building a multi-bank, multi-tenant issuing and program management platform that lets retailers and fintechs run serious card programs and giving banks real visibility and control. Can we unpack exactly what that looks like? And do me a favor for our listeners, and really mainly for me, can you tell us, like I'm a fifth grader, what it means when you say all that stuff?
Yeah, absolutely. I'll take a shot at that, Joe. So let's start with program management. Most banks don't know payments, not really, right? They understand that money goes through in and out of them, but they don't understand some of the technology compliance and really the regulatory oversight of managing card programs. And so program managers, what they do is they help banks operate card programs, whether that's a debit card or a credit card program, helps them kind of keep them out of the muck when it comes to regulatory compliance and oversight. Helps them give them visibility into things like, how much revenue that they're making, are their teams operating the program correctly or within scope, and helps them kind of extend, if you will, more resources out through a program manager to help operate programs and help them be successful, right? Because banks themselves, ultimately, they're the ones who have to be recognized as a BIN sponsor or bank identification number. It's a sponsorship, and they're the ones who manage cards, right? From the standpoint of, like, say, a retailer, what we do is we help retailers do a few things. We help them understand what they want, what their objectives are with wanting to build a card program. Is it something like, hey, I want to give back rewards to my consumers through credit cards? I want to maybe have better engagement for the payments that I allow them to do or kind of maybe take in. And so what we do is we work with retailers to do a couple things. One, build the scope of how they want to operate their program, make sure they're doing that in obviously a legal way that says, hey, we're doing compliance oversight in the aspect of how we should be managing these expectations with our consumers. But then we also extend the technology side, right? Some retailers, they don't know about computer software and development and engineering or APIs. And so what we say is, hey, we'll do this part for you. Some of the retailers are very deep in tech and they want to maybe keep the integrity of their brand and maybe incorporate technology into their solution, and we give them APIs to be able to do so. So what we try to do is holistically, if you think about that all put together, is help someone build a card program, keep them compliant in the legal landscape, right? And then bring that thing to market for them to be able to help them operate.
Yeah, I
Okay.
think one of the things we really try to push on that, Joe, is, when you're building a card program, the number one thing you want is to create engagement, like a greater engagement with an audience or a customer base that you already know, and you know that other people are coming for them in different ways. And so it allows you to create a financial relationship with your customer base, even if before you were just their retailer and where they spend money. Now you're creating a greater engagement, a greater way for you to understand or get part of their spending. And then as a company is like, what are your objectives other than that? Are you trying to increase revenue? Are you trying to get gross revenue, more spending overall? And then, what does that really entail for you? Because now you can take your business in different directions because now you're in the payment business.
Gotcha. So if we kind of attach to this something that everybody would know that isn't a plug for anybody, it is Christmas time, by the way. So, if you were to think like Toys R Us, right? I'm not even sure if they're still in business. That's why I picked them. If Toys R Us has a card program, right? It's designed back in the old days. It was like you got cash. That's how you buy stuff, and then it became, well, cash or charge, right? And so the people that had charge, Visa and Mastercard, meaning the retailers that had that, were able to get a larger share of the customer's wallet, right? Because they weren't limited to just what was in their pocket. Well, now everybody's got Visa, Mastercard. So the next step is this branded type card, right? Which is designed to get Toys R Us customers spending more money with Toys R Us because there's certain incentives, right, to do that and to get more connected. Am I summing it up pretty simple as far as a kind of real world explanation?
Yeah, I would say that's spot on. I would tell you the only difference I would share with when it comes to like consumer behaviors, especially over the last say 10, 15 years, is consumers want more engagement from the big box brands that they engage with and purchase from, right? So it's not necessarily just cash back anymore. They want to know that, hey, if I spend $5,000, I get entered into a sweepstakes that helps me get that $5,000 back, or I get a really cool limited edition widget or toy, right? They want to be able to have something that other people don't have as a byproduct of their normal spending. So it's a lot more about engagement right now with consumers as opposed to, I would say, more benefiting the big box brands.
So if you're somebody from my age, like you're wanting that chance to win that gold-plated GI Joe with the Kung Fu grip.
Right.
Right.
All
Absolutely.
right. All right. Great. Glad I was able
Yeah,
to
and
pull those
take it to
metaphors
any
together.
industry, right? Those special kinds of Jordans, front row tickets at a concert that you can't typically afford or go to. All those kind of experiences, because we live in a generation where if it's something around anything of $100 or no or less, I mean, people tend to spend that these days. Where they want that special kind of experience that they really couldn't ever afford, but they want to be in the mix to be able to be eligible for that.
Yeah.
Very cool. All right, Steve, you're more the sales guy and Walt's more the tech guy, if I understand that right.
Yeah.
Okay.
Yeah, we're getting him into more sales these days. So
Well, you need the technical sales guys too. So who is your customer? Is it the bank or is it the retailer? And what is your sweet spot for prospective customers?
Oh, good question. I think that's what's unique about us is that, when we have a fintech or a modern business retailer come to us, they're our customer as well as the bank. We partner with the bank, on behalf of that client of ours. And so we actually wind up, becoming a partner to the bank for the program. And one of the things that we also do differently than a lot of other program managers and the reason why banks want to work with us is because we continue oversight of the program. So it's not just about launching it. It's to make sure the rewards are working correctly, the spending the way they said it was going to work correctly, the volume is increasing the way we told the bank. And so the bank can trust in us to know that the program's going to continue to be working in the correct manner. And so that's one of the things that we do different. So we kind of sit in the middle of the relationship between, so we can tell the fintech or we can tell the retailer what it is they need to do. We get that from them, and then the bank gives us everything that they need, and then we make sure it all gets facilitated in the middle. And that's one of our things that is kind of niche about us, is that we understand banking and we understand payments. And I know this is going to sound kind of weird, but most people don't know both. Most people either know banking or they know payments. They don't know both sides, and so that's what makes us quite unique.
Very cool. All right, thank you. So what's your sweet spot as far as, for a retailer? You call that a modern business. You mean a business that is operating possibly in a real in the physical world as well as, online, or maybe online only, right?
Yeah, well, I've contributed to that. When fintech started, and you look back 20 years ago, when financial technology, and now it has the name of fintech. Established businesses that have been around for 50, 40, 30 years, they weren't in that mix. I think that what's changed is these older businesses have realized, hey, we're not just going to let fintechs do this. Like we can build a card program. We actually have substantial customer bases that we've been building over these decade after decade. And so why couldn't we do services like that, or offer newer tools and newer financial experiences to our customer bases? And so I think that's where they want to work with a payment fintech like us, to say, hey, we can help bring a modern platform. We can help build and bring a card program to you without you having any knowledge of even technology or payments.
Okay, cool. Do your sweet spot prospects. Who are you looking for?
Sweet spot. I think our sweet spot is people that have large customer bases, that want to engage those customer bases on a different level, want to drive call to action spending in a better way, and that want to increase their gross sales, and really offer something different back to their customer bases that they haven't been doing for years, and bringing more experiences to them. So, why not help them out with a card? We're in a generation now where, when I grew up, you only thought about doing financial stuff with a bank. But, this younger generation doesn't think bank. They think about they think about the businesses that they like doing business with. So they want to do even more business with them, which I think is pretty unique and pretty cool. And so what we want to do is help those businesses, go after those customers that want to do more with them and want to experience more with them, because customers now have built trust for some of these brands that they really do a lot of business with. And why not bring more about what they're doing on a day-to-day level, so they get greater advantages with their favorite brands?
Yeah, I would say, in addition to the brand focus with the younger generation, they also want they want the least amount of friction possible.
Yep.
So when you sit down with that retailer that you're looking to bring onto or that needs a program manager, what are they usually frustrated with? Is it time to launch, lack of control, the clunky customer experience, or just not seeing the lift that they were hoping for from their card program?
Yeah. I mean, I'll jump in from the technical standpoint. I think there's been a lot of mid tier, or small, even SMBs, businesses. They've really tried to address friction, either whether it's website design or it's mobile app design and kind of experience. They've tried to really address that as much as possible. And then maybe there's some areas where there could be improvement, of course, like where you're checking out or paying for something. So they'll ask us our opinions on that. We, of course, can provide that. I think the big thing where we're trying to help meet the expectations is, it's either businesses want to be able to grow, kind of land and expand by offering a new product set, and they need help doing that. Card program is not native to them, right, or building a card, and so they need a lot of help there. But in turn, what that usually does is it says, hey, I have this new vehicle now to be able to market differently than I have had before. So they really want to jump into that. They want our experience or maybe assistance in saying, hey, how do I build more engagement through my card program? And where else can I maybe have some lift that I see in my organization, whether that's maybe increasing margins, bottom line revenue. And so we kind of run the gamut, but it's primarily focused on how do I engage better, or how do I make my friction less.
Yeah. And also increasing on like new versions of their, new parts of their business, right? If they want to expand in their business, it's a good way to market toward that. Or, they have newer products or newer solutions that they want to bring to the marketplace. It's a way to introduce that in a different way.
Mm-hmm.
So what is your game-changing differentiator for these retailers?
I think.
I think the
Go ahead,
Yeah,
Steve.
go. I'll go. I think the openness to how we think about the reward programs, and I mean, you're starting to see this from large corporates as well. But really looking at experiential rewards. People are really looking for experiences out there. They're looking. Nobody cares that they can get a $50 speaker. People have those. They have numerous of those. So it's how can you bring different ideas back, really think through the programs, tell us about your consumer behavior, tell us where their behavior is today and where you want their behavior to go. We're working with right now we're working with the University of Georgia's MBA program, fintech program, to work on an analysis of what that really looks like in the marketplace. What are consumers looking like for behavioral rewards, and what does that want to go after? So I think, the difference with us is we're not going to bring you something cookie cutter. We're going to customize your experience. We're not just going to try to throw you into a program that this this company throws 10 people into this program and they want you to look like everybody else. We believe that the marketplace needs unique programs. You need to be specialized in what you're doing, and you need to make sure your offering looks different than anybody next to you.
Very cool. Okay, great. So from the bank's point of view, what can they see in your dashboard that they couldn't see in a typical banking as a service setup?
Yeah, so I'll take that one. So every program, to Steve's last kind of answer, every program really needs to be different. And so the data points that a bank may want to see to help operate that program can change from program to program itself. What we try to do is, regardless of the program type, we're empowering the bank to be able to have a dashboard based on what it says kind of the many different roles or hats that you have to wear as a banker on a day-to-day basis. The guy who's the CFO one day, he might be the chief lending officer the next day. He might be having to go to a branch and be a manager on Wednesday, and then Friday he's got to go back to his CFO job. And in those roles, right, you have a lot of different things you need to manage too. We build personas based on what you need to do. So if you're a head of compliance, you want to be looking at, hey, when's the next time I need to run a KYC or knowing your customer on a card or account? Because our recommendation as a bank that we have to do this 4 times a year. So how many accounts need to be done on Monday versus how many accounts need to be done on Friday of that week? For the CEO, he might want to just be able to look at the profitability of the program and the cost of the program for how many staff or employees need to be there. So we build metrics based on the role persona, and those are dynamic. Right? They change on a daily basis. It changes when Walt goes and spends at Toys R Us versus when Walt goes and spends at Outback Steakhouse, and the same thing applies for every single cardholder. So they want to see that data, every single transaction, want to know that every single time that the transaction is done, that it is in compliance. And not only that, but hey, is there revenue behind that? And what can I see to do, or what can I do with that?
Yep.
That seems like that would be pretty important for them. That's pretty cool. One of the things I alluded to at the very beginning of the podcast, and was really quite startling to me, was the gap between signing a deal and actually going live. So you all have said it's not unusual in this industry for deals to sign and then sit there for 18 to 24 months to launch, because no one's really truly owning the complexity. Why does that happen so often, and how do you all change that?
Go ahead, Walt.
Okay. Yeah. So, it's not directly at a fault of any one organization, right? It's maybe a byproduct of sales and trying to have growth. There's organizations out there that, have gone public, and to stay relevant or to stay really in target with the stockholder shareholders and what their expectations are for growth, but they got to sign a bunch of deals. The problem with that is not necessarily their fault. Good job for them on sales. Is that there's not enough banks that are what is recognized as BIN sponsors in the US to actually get those deals done, right? When a bank has to open up or start a program process and they're doing it on their own without a program manager, let's just say, that might take the bank an inordinate amount of time to go ahead and run through the compliance, validate the fact that they like this contract, first of all, that they have all the resources and staff to be able to do it, and that they're also going to have, the planning for a ramp of, when they're going to go live, et cetera, et cetera. And so the bank might be saying, hey, for me to even start this program, it's going to take me 9 months. Well, for the issuer or that sold that deal, it might take them another 9 months to catch up. So you're looking at 18 months for a small business or even a big retailer who wants to get a card program out there. They have to wait because there's just not enough resources that are out there. So how we try to combat that with our the methodology is we go out and find the banks that maybe don't have a big backlog or that are maybe a little bit more diverse or know that, hey, they need help from a program manager to help them get them off the ground. And with our help, we can get that done in 6 to 9 months or even less in some cases, because we're trying to go and find the right bank for the program, find that right fit and relationship, and then also help bring more banks to become what is known as a BIN sponsor. The more banks we have, the better we can actually get our deals to fruition, if you will, and get people live.
I think this is really where, that's really like kind of the way we've looked at this in a different way than others, is that, trying to solve it, not just with the platform, but we also have experiences on our team. We have consultants that we work with that can help the bank from their side get ready. So we take banks who have never launched a program and get them to launch a program within, that, 4 to 9 month time frame. And so one is it, helps community banks. It helps them, get greater revenue as they're struggling, they can't just live off, loans anymore, or, certain kind of lines of credit. They need to expand as their communities are getting smaller. And, more importantly, the competition, big banks are in small towns now. They're not like, it's not these big cities. And so they're looking for, so we're basically bringing them the advantage of, hey, we can actually get you into the payment space. We can actually get you into sponsor banking. We can help you with the lift. We know people who can get you set up inside the bank for regulatory requirements that you're going to need, as well as, we'll give you all the requirements you need to get the program off the ground, get established with the brands, make sure everything's working, good with Visa, MasterCard, and Discover as well, help you get through those requirements. And so we can take banks who have never done it or banks that have done 1 or 2 platforms. And then the way our team works and the way we built that program management layer and really focused on that, it allows us to help banks who might have been at their bandwidth to actually launch more programs, because we're taking a lot of the lift and the oversight on the by continuously monitoring the program. So that's where we really feel like we're coming at this a little differently. And we feel like, in time, we'll be able to have more and more banks and solve the problem through empowering banks to launch more programs versus just, signing people to a platform and hoping they can get live faster because the banks that have no bandwidth can move faster. Doesn't seem to be the recipe.
So, from a bank perspective, roughly how many banks are there in the United States?
There's roughly about 4,500 banks, depending on how you look at the makeup of it.
How many would you say don't, because neither one of us live in small towns, right? How many community banks? I know Dave Mayo over at Fintech Cowboys. He probably loves you guys. And should, right? Because you're trying to help these banks that have never had a program. How many of them don't have something like you're mentioning, would you guess, percentage-wise? Or
90, 98, 99%.
Well, yeah. Put it this way, there's only about, I think, FedFizz, Dave Mayo's company, I think they have a stat, they'll probably kill me for getting it wrong, but I think it's only 170 banks touch payments whatsoever in the United States out of that number.
Yeah.
Wow. So that's a lot of green space there.
A lot of green space. And mind you, not all of them, not all the banks, if you're under a certain asset size, you most likely can't really functionally be a BIN sponsor. That's why, you buy products and services from some of these larger companies that can help you maybe get like a debit card out to market for like your checking accounts. But if you want to do something where you're bringing in, again, like a large retailer, a mid-sized business, and you want to sponsor their programs, there's mostly 170 to maybe 190 banks in the U.S. that maybe do that.
Gotcha. All right. So here's on your website, you all put compliance and oversight at the center of the platform. You got this 2-sided strategy, helping retailers and helping banks. That brings us to one of my favorite topics, and that's technology, especially AI. How can AI help you scale that vision?
Yeah, so artificial intelligence and the big old movement of AI, I think I'll start off first with there's a lot of opportunity for growth and to be able to utilize AI to help institutions or banks, maybe get to market faster, or even help retailers be able to solve for some of the challenges. But it's not a fix-all, right? I think there's still a lot of learning that needs to happen. But like one of the cool things that you can do is just from the center of like standpoint of call centers, right? No longer is it the day where you have to call the number on the back of your card. You have to wait 5 minutes for getting in touch with a customer support representative at a call center, and they're going to slowly walk you through a 9-minute phone call that says, "Here's how I reset my password, and oh, by the way, I want a balance, and can you tell me where my card is in the mail?" Right?
Right.
90% of those related types of questions that come through can now be all answered through agentic AI, right? And then what you're really doing is you're building up some operational I would say bandwidth there where you can kind of retool some of these customer service agents to be a little bit more white glove, right? That 10% that actually calls in that wants to be able to have that human experience or gets through all the agentic AI, you can really give them that time and attention that you want to, and really better build your brand and experience as a bank with those consumers. So that's like one model. Reporting. Sometimes when you build reports, right, they have 25,000 pieces of data that you want, and really all you're looking for is 10 things to be kind of combined and give me really the answer of the data that I'm really looking for, right? Be a little bit more concentric. So AI can help you build and kind of scrub through that stuff. It can also help you with outbound engagement, right? You can do a lot more automated type of marketing strategies where you're able to get a lot more touch points at a lot less cost structure. And so AI can be kind of embedded or placed everywhere. It can even help you write kind of compliance policies, right? A lot of the laws that are out there are on public domain, so you can kind of do that, but you still need to have the human oversight and maybe rubber stamp. And so it helps you kind of cut down the minutia or the job process of having to build all this documentation or try to go through so many processes that maybe were inadequate before. It lets you kind of build that efficiency a lot faster.
Okay,
Yeah.
that was a
I'd
lot.
add to that. I think it's also, when you talk about card programs, it's really going to change. Is so many companies are looking at it for, the autonomous buying. So like I buy this much. AI is able to tell you, you buy this much. You want me to go ahead and make these purchases for you. You want me to go ahead and, you're a single mom. You're working hard, and now all of a sudden you can get your groceries ordered for you automatically every week, and you put in a list and want to get your Christmas shopping done, and now it goes out to different retailers and buys on your card because it has spending permissions and limits like that. So I think it's going to be really interesting of how it changes the buying processes going forward, and how much power that's going to create for users and freedoms. So I think that's really an interesting model, and the big companies are all over it, right? Amazon, Google are looking at it, Apple, of what that's going to look like, and it'll trickle down to guys like us, where how can we empower what they built, and how can we make that better for the card programs that we're building?
Yeah, I firmly believe that 2025 was the year where AI became a household topic, and a topic in every boardroom in the United States. I think 2026 is where the beginning of actual implementation for, let's just say the bottom 90% of all businesses, which are the small to medium sized businesses, right? I mean, got a lot of baby boomers out there that they know. I talked to a guy yesterday. He is a leader of I would say $100 million business.
Mm-hmm.
And he literally told me, he's not the CEO, but he's got an SVP in his title. He goes, I still don't use, why would I use ChatGPT? I haven't even touched it. I haven't even looked at it yet. I'm like, are you kidding me? And then he was able to see some of the things that I was able to do in like instantaneous after a meeting that we had, just even using, an AI note taker or whatever. So I think 2026 is where we're going to start seeing implementation and implementation struggles. So Stephen,
Joe, sometimes I don't even know, like I had a guy tell me, I'm not using any AI. And then he asked Siri, how to get somewhere. And I was like, you're using AI, man.
Right. But how do you turn that corner and implement that into your business? So I'll ask you that. If AI could move only one metric for each of you in the next year, Stephen, what would it be?
Greater fraud controls. That would be the one I would focus on.
Okay. Awesome. How might it use that? And what are you doing today to plan for that?
Well, that's where Walt comes in a lot on that. But I mean, I think through it of like, like the process of how people do the spending and how we could, recognize AI can help recognize that this is a really, this looks very different than the average spending habits, right? But being able to serve that up and say, hey, maybe you really are somewhere weird that you're not used to being. And, but able to verify that faster, I think that's what you want, because you also, the trouble with a lot of it is if you block and try to go after too much blocking of fraud, then you really hurt the user experience. And so there's that fine line in between that you want to make it seamless for the user, but you also want to protect yourself and the user and the consumer. So I think that's where I'd want to see the advance and want to see what we could do with greater tools. And we're trying to talk to everybody in the market who's working on that and who can who could possibly help us with that, as like that's somebody who we'll partner on, because we're focused on what we need to do what we need to do for the cards, and building the strategy there. So we're always looking for vendors who are out there building something that's special.
How about you, Walt?
I would say it's, I don't know, maybe revenue or portfolio optimization and modeling. So because credit cards and the way that you have to manage those, you have to kind of build out things through like a credit facility or be managing, a lot of dollar amounts to manage the expectations of like all these different cardholders and utilization of the cardholders and what the balances are and all the things that go over the lifetime of a card program. For me, it's what happens with different market conditions. We just had obviously a drop in the Fed rate cut, right? And what does that do to my top line or my bottom line? What does it do to the experiences of people? Are they going to want to spend more because interest rates go down and their cost of capital is maybe going down? Do they want to spend less? Do I need to worry about people starting to miss payments? So modeling for me is really a big one, because I want to know things that are happening or events that could possibly happen, and kind of drill it down to those scenarios.
Yeah, predictive behavior analytics are really going to be where I think it's a game changer. Where now, we're used to building personas and saying, "Hey, this is what this persona does," versus like, "Hey, this is actually what they do. This is how they spend their money."
Yeah.
Interesting. So one of the things, Steve, that you were mentioning as far as like fraud protection and safeguards and interacting with the customer, I mean, I totally understand what you're saying is there's a fine line, right? One of the real big ones out there, and I'm not going to say their name, but they have this little widget called Eno, right? Do you guys know who I'm referring to?
Yeah.
And I was just in New York the other day and probably making about my fourth purchase on my credit card, and then I got declined. And man, first of all, not only is it irritating, it's embarrassing. And I remember back when Eno would send me a message through the app and go, "Hey, are you authorizing that?" But it didn't happen that time. I literally just went to my phone, I looked, and I tried to go, "Hey, why did my," and it kind of got all discombobulated and didn't give me a good answer. Like it actually had. It seemed like it had gone backwards. But that technology is out there. It's just like, hey, right through your cell phone. Is this you? Or do you authorize this? Yes. Click the green button, get a code to authenticate it or whatever. It seems like that's over. A lot of that's built. It's just applying it correctly. Am I right?
Yeah, I think they're going to have to, it still has to get better, right? It's like, training an employee, right? Is an employee's not near as good the first 6 months as they are year 3. So, they have to train the data models and get the data models sharper and sharper. And that's where, it'll move a lot faster. What you'll see is the progress from that problem today. You'll see that problem get fixed and solved so much quicker than, before. That might have been 2 or 3 years. You're going to see it get solved in 30 days. So I think that's where we'll see the advancement, and you'll see, and then really what you see is then you'll see, customers' expectations, you had those once and you're upset, wait till you get even more advanced tools and you're like, well, why didn't they tell me? Or, they should have told me that this was more expensive at this store than it was at the store next door to me, so you're going to get to models like that in time.
Very cool. Well, as we zoom out a bit, you're operating in a pretty big sandbox, right? I mean, how many prospective customers are there from a retailer's perspective that are out there that fit that model? Because you guys are looking for the B's as in billions, not M's as in millions for retailers, right?
Yeah. But I mean, yeah, especially because we do commercial too. So we haven't, talked much about that, but there's huge commercial models out there as well for, paying invoices better, and and how card programs can get much more refined when you have people on the road spending, or different spending models for how they want to do it, because there's a lot of protection on the rails too, that we can offer through the programs, and we can also lock down certain programs that they can only be spent in certain places or certain stores. So there's a lot of ways to go after solving things when you're working with a company who can do customization, and works closely with the brands and the processors to get that done.
Got you. Modern businesses, that want to deepen loyalty with their program cards, networks like Visa and MasterCard, they're looking for better program management. When you look at the next 3 to 5 years, where do you see the biggest opportunity for Next Moves?
Yeah, my sense in that is to do the work, which is try to bring more banks into the fold of becoming BIN sponsors. I think that can only benefit Visa, MasterCard, Discover, the card brand networks in general. There's not enough, right? We need a lot more. Steve and I were at a symposium at the end of summer with one of those card brand networks, and we took away from 8 hours of meetings that they need more BIN sponsors or sponsor banks. They need more sponsor banks, and they need more sponsor banks that do credit. So like the three things that they're really focused on is they need more sponsor banks. So I think the big opportunity is to help these banks who maybe been a little bit sleepy, maybe not taking the advantage of it, kind of advancing their technical strategy or how they want to do engagement or business models, bringing them kind of forward to this new era of being a BIN sponsor, helping them diversify their revenue. I think that gives us a huge amount of growth opportunity. The card brand networks, they have all these programs coming at them, but the reality is they need cards in people's hands or in their wallet, so to speak, and swiping cards. That's how they make money. And so for us to bring more BIN sponsors to market, that helps them get more cards to market.
Yeah, and I'd add to that obviously brands don't make money when cards are sitting on the sidelines. I think also just a quick history. After 2008, a lot of community banks really got burned on their programs. They didn't get necessarily all the money to trickle down to help them out, and a lot of them lost, and they really got rid of their commercial and consumer credit card programs. And one of the things that we have really focused on, and we felt like was an open spot in the market, was credit cards and building better credit card programs, and helping community banks bring back real commercial programs to them, like whether they want to hold the line of credit or not hold the line of credit, but have commercial programs that actually compete with the Amex small business card, compete with Sparks, compete with, the programs that they're going to have to, because before, they were launching cards that they're really not competitive. So then nobody uses them. And then they're like, well, we can't, our programs don't work. It's like, your program wasn't good to start with. Let's put a good program in. Let's help you build back value to your customers, and help you get, build more loyalty with your customers, help you get newer customers. Because, giving somebody a credit card is a lot easier than trying to get them to convert a checking account. But you might be able to get them to convert that checking account over time if you can start a relationship with the card. So.
Insightful. Thanks. I appreciate that. Well, you mentioned that the need for more BIN sponsor banks. That seems like it's a pretty big kink in the hose. What is Next Move's kind of role in facilitating that, creating more opportunity for, like, how do you affect that?
Yeah, so part of our engagement with institutions is to understand where they are, kind of meet them where they are currently today, right? So a bank might not be ready to be a BIN sponsor, but they might be able to participate as what is known as an affiliate on a program. So that means that, hey, they're going to use another bank to help them build a credit card product or program that kind of puts their feet in the water, helps them get understanding the minutia of all the things that really are impactful to operate a program, and then maybe they want to take a stab at a program a year from now, so long as they learn the affiliate part first. We help them with that whole entire journey of let me show you how to become, let me teach you how to fish type of model, right? But it's more like, let me show you the minutia and all the things and controls and all the things you have to consider as a bank to operate as an affiliate. And then from an affiliate, let me take you to a BIN sponsor and let me help you with that lift as well. We supplement those services in as a byproduct of us trying to help educate banks. We do a lot of education, and that's good for us, right? Because it helps us understand who's really interested in the market to take those next steps and leaps, and we can help them kind of along their journey.
Yeah, and that's where Dave Mayo and Tanner and all those guys, the FinTech Cowboys, they work closely with Bankers Helping Bankers, and Bankers Helping Bankers led our seed round, and that's made up of over 480 banks, and and they're constantly helping banks, giving banks services for no cost, and so we want to be able to be partnered with them to be able to help these community banks on the payment part of it. Or getting into, offering better solutions directly to their customers. So that's the part that we want to, partner with Bankers Helping Bankers and do that as well.
All right, chicken or the egg type question here. So your target customer is the retailer, right? And the bank is what you bring along as far as the beneficiary. And so does the retailer drive the business case scenario, and how do you find those retailers that either need a better program or just need a program, period?
Steve,
Yeah,
go ahead.
So we have a large network of people who have been bring us leads. We work with the brands. We're a certified program manager with MasterCard. So they have a product express product that we work with. We work closely with Discover, closely with Visa, helping them out. That a lot of times when companies come to them and they know that they don't have any wherewithal on like how to do this, but they know they want it, they don't know how it works or anything like that. They've been really helpful of bringing us into that. So when we look at it, one of the things we start with is, do you have a customer base that's, that can be big enough? Like we just met with a mobile company that many people probably haven't even heard of that has, millions of users. And they were like, is this an opportunity? Is this something that we could, look at? Should we think about a card program? And then, we kind of start walking them through. I think when you have, you have 100,000 customers or more, I think you can start looking at, maybe ways of opportunities, even if it's one-time cards or different things like that. But I think there's, that's what we would consider, somebody who has, or has the association with customer bases. Like you might work with an association that has, 1 million people in it, and they're not all going to necessarily do that. But, 200,000 of those have an affinity toward your product or your solution, or want to work with you, or want to get better, more information from you. So those are the kind of retailers or non-retailers that, maybe they're just, maybe they're an insurance business. Maybe, I don't like narrowing it down, because every time I think that this is what we work with, we get somebody that comes to us with some idea that I never thought of. So I'm very open to the idea. I think the key is customer, your current customer base, or what you could get to as a customer base. We just had a deal come to us that's working with multiple influencers on YouTube. Which is going to be a really fun program to work on, and I'm quite excited for that in 26. So.
That was my TikTok move. Yeah, funny enough, we were just in New York, like I said, with my youngest daughter last weekend, and she was like, "Dad, that was where we did our TikTok dance, 2 years ago." I'm like, "Yeah, don't remind me, thanks." My moves have not gotten
I'm gonna have to look that up, Joe. I want to see those moves.
Oh yeah. All right. Hey, let's have any last thoughts before we go, and then we're gonna have a quick lightning round for fun.
Let's just jump into the lightning round. Hit it. Yeah. Let's do it.
Hey, so morning ritual that keeps you sane.
I wake up at 4:15 and go to the gym and do HIIT training.
God bless you, sir. I love that for you. All right, Steve.
What keeps me sane, I don't know what morning ritual that I do is I get up and I do a focus session every morning on what I want to accomplish that day. And that kind of clears, keeps me from like being all over the place, even though people know me, so you still could be all over the place, but it helps me kind of lock in for what I need to do. And I do take that, whether, I'm taking a 15-minute shower or whether I'm just sitting in my car or whether, just sitting there talking to the dog on the couch. But I take time to make sure that every morning that I get some focus on what it is that I want to achieve that day.
Great. All right. If you had a superpower, what would it be? Walt?
I'm going to go flying.
Let's fly, baby. How about you, Steve?
I think being invisible would be kind of cool.
little creepy. I think you listen too much Sting every move you make. Creepiest.
Well, I don't know. I can. You get in the. When you get to go to as many conferences as we do. Sometimes you're in a good conversation. Sometimes you're in a bad. It'd be good to just disappear out of there.
A little shape shifting wouldn't be bad. All right. Hey, if you could wave a magic wand and change something in your business in the next 90 days, what would it be? Walt or Steve, whoever's got one, just raise your hand and go.
Yeah, I would say that basically just getting another bank or two just to get signed up faster than what we normally have to go through and speeding up that process. We couldn't have enough banks for the programs that we have now, so getting more and more banks signed up is really the key, and to do that in 90 days would be great.
Yeah, I would say everything that I have in my brain for development, just have it all be done. And there you go.
So wait,
that's a real good magic wand, Walt. I would love to have that magic wand.
You need an AI Walt. I mean,
a couple of me.
All right, cool. Well, listen, guys, this has been a fantastic conversation. We covered everything from banking stuff, architecture, sponsor bank bottlenecks, and to how hands-on program management can be the difference between a deal that dies and a program that thrives. Steve, Walt, thank you both for being open and transparent. For listeners who want to learn more about Next Moves or connect with you, what's the best way to find you guys? LinkedIn, the website, anything else?
Yeah, website is
info
website
at Next Moves, or hit us on LinkedIn. My name's easy. I'm the only one on there with my name. So if you can't find me, you're not looking too hard. And I do try to answer everybody.
Steve, spell it for us.
Nigri.
Pronounced?
Nigri.
Walt?
Walt Hoffmann, and 2 F's and 2 N's. Just everyone's got to remember 2 F's and 2 N's.
All right. Well, great. Hey,
doubled up.
We'll drop those links in the show notes. This is the Anvil and Iron podcast. We forge ideas, relationships, and the future of business. I'm Joe Knotts. If you enjoyed this episode, share it with someone in your network who's wrestling with embedded finance, loyalty, or card programs, or just wants to listen to a couple awesome guys talk business. Until next time, keep sharpening those around you.